Hello viewers, welcome to my channel. I'm Hasham. So after a gap of more than 30 days, I have resumed starting the journey of these videos on accounts, commerce, management, etc. Since last 1 month, I was so busy in my official work, I couldn't get any time to make the videos. I got so many comments, so many requests from the students regarding resuming these videos on different subjects, which will be helpful to graduation, post-graduation and professional students. So now I have started to resume the work, a good work of imparting the education, to give more and more knowledgeable videos to the students. So I'm very much thankful that students have shown so much of attachment towards my channel. My views are increasing, comments every day. I'm getting so many comments on my videos. So now today I'm going to start a new subject, auditing. So in this video, I'm going to explain you about the meaning of the term auditing, the definition of auditing, and the evolution of auditing. These three topics I'm going to cover up in this video. So after watching this video, definitely you will get a lot of confidence on the subject, on the topic, so that you can boldly face the examination. You can enjoy the learning journey of this subject of auditing. So now I'm going to start with the meaning of the term auditing. The word auditing has been derived from the Latin word audire, means to hear. So normally a business will appoint an accountant who will maintain record all the transactions. Later on, another group of people will check whether the accountant have done correctly his work or not. So this second group of persons who check the accounts are normally judges. So they will see whether the accountant have done correctly their work or not. So the work done by the second group in checking the accounts is called auditing. And the person who check the accounts are called auditors. First of all, every business will prepare financial statements. The financial statement consists of income statement and statement of financial position. Or in other words, we can say profit and loss account and balance sheet. So every business will make these financial statements, and these financial statements are very, very important for every business, because a number of parties will take the decisions on the basis of these financial statements. So it is necessary, compulsory, that these financial statements should be true and fair. There should not be any mistake or fraud or any manipulations in these financial statements. So there is a need to check the financial statements. So auditing involves the checking of the financial statements. Nowadays, the main form of business organization is joint stock company, where there is diverse of ownership and the management. So owners wants a reliable, authenticate financial statements. So some group of persons, some professional people must be there who must be able to check the accounts and give their opinion whether the accounts are true and fair. So the simple meaning of the term auditing is checking the accounts. Checking the accounts, whether the accounts are true and fair or not. So after checking the accounts, give the opinion how the accounts are. So traditionally, the meaning of the term accounting is auditing is an examination of the accounting. So two different terms are there, accounting and auditing. Accounting is the process of writing the records, writing the transaction, and auditing is concerned the checking of the accounts which have already been written. So examination of accounting records with a view to establishing whether they completely reflect the transactions, whether the financial statements and accounting completely reflect the transactions taken place in the business. Then the auditor expresses his or her opinion on the character of the statements. So after checking the accounts, the auditor has to express their opinion whether the accounts should portray a true and fair view of the state of affairs of the big business. It should show the correct picture of the accounts. Now, audit is an exercise. Auditing is an exercise to see the validity and authenticity, reliability of the information. Whatever financial information is recorded in the books of accounts, these financial statements are reliable or not, are complete or not. To check that, we will resort to auditing. So auditing will include looking for evidence. The auditors will look the evidence of the transactions. The evidence may be in the form of vouchers, in the form of invoices, in the form of contract deeds, in the form of statement of accounts. All these are and related other documents. On the basis of those documents, transactions are recorded. So auditors will verify, will vouch, will check that every transaction should be evidenced by a proper document. To ensure that there is no fraud or error. Why the auditors are checking the evidence in the records of the transactions? To see whether there is any fraud or error in the books of accounts, in the preparation of financial statements. So till now I have explained you auditing. The meaning of auditing is checking the accounts maintained by the accountants, whether there are any errors or mistakes in the accounts, whether the accounts shows the true and fair picture of the financial affairs of the business. This is the general meaning. Now I am coming to the definition of accounting. Different authors, different experts have given different definition of the term accounting, but the basic meaning of the accounting is same. Example, one of the definition was given by Professor Montgomery. Professor Montgomery has defined the term accounting as auditing is a systematic examination. First of all, it's not a random or just a casual checking, but it's a systematic examination of the books and records of business or other organizations. Whether it is a business organization or any other organization, it's a systematic checking. It's a systematic checking, examination of the books of accounts in order to ascertain or verify. And to report upon the facts regarding its financial operations and the result thereof. So auditing is systematic examination of the records of the business or any other organization, and to verify and to report upon the facts regarding the operation results of the business organization. International Federation of Accountants, another association, has given the meaning of the term auditing. This is an audit is an independent examination. Remember, auditing will not be done by the same person who have maintained the accounts, but auditing will be done by a independent, separate person, another person. Independent examination of financial information of an entity, then whether profit oriented or not. That means auditing is not confined only to business organization. Wherever accounts are maintained, there is a need of auditing, whether it is profit oriented or not, and irrespective of the size or legal firm. Whether it's a small firm or a large firm or a medium firm, whatever its legal firm, whether it is a sole trading concern, partnership, or a limited liability company. So any form of organization, whatever be its size, whatever be its legal form, auditing is required. When such an examination is conducted with a view to express an opinion, the complete process of auditing is done with the objective of expressing the opinion. So after checking all the accounts, the auditor have to give a report. In the report, they have to express what they have found, whether the accounts are showing true and fair picture of the financial affairs or not. So all this exercise of auditing is done mainly to express the opinion by the auditors. This is the definition given by International Federation of Accountants. Now conclusion. Many definitions are given. I have explained you only 2 definitions, but all the definitions are common. Every definition says it's a systematic examination of the financial records. So from these definitions we can make some conclusions. The conclusions are audit is a systematic examination. It's not a random. It's not a casual examination, but auditing is a professionally systematic examination. Secondly, it is conducted by an independent person. Remember, auditing will not be done by the same person who are maintaining the accounts. There is no purpose at all. So auditing should be done by a professional, independent person, not related to the business. Should not have any interest in the business. It involves examination of financial statement and related information. So auditing is concerned with examining the financial records, the financial statements. So all the financial information he is concerned. Next, its objective is to express the opinion whether the financial statements truly reflect the state of affairs. The main exercise of all these auditing is to express the opinion. So after conducting the complete audit, the auditors have to express their opinion in the form of report, whether the financial statements shows a true and fair picture of the state of affairs of the business. Now the exercise is carried out by professionals primarily on behalf of the business. So normally these auditors are the independent persons. Their job is to verify, check the accounts, give the report to the owners of the business, that what they have found from this checking process. Lastly, it does not matter whether the entity being audited is profit making or not. Auditors are not concerned with the form of the organization, whether the organization is profit oriented or service oriented, whether it is a large business or small business, whether it is a sole trading concern, partnership or company, whatever be the legal form, whatever be the size of the business, the auditors have to give the opinion. Then evolution of auditing. So far I have explained you about the meaning of the term auditing and definition of the term auditing. Now evolution. Actually auditing is perhaps as old as accounting. The accounting and auditing have been started simultaneously. The history of auditing is related to the history of accounting. In ancient times, it was found in the use in many ancient countries such as Greece, Egypt, UK, etc. In many ancient countries, the auditing was conducted very long back. However, the term auditing owes its origin to the Latin term audire. A-U-D-I-R-E, audire. Audire means to hear. Audire means to hear. The auditors will hear from the accountant what they have done. So, originally auditing involves detection of errors. In the earlier times, when the auditing was originated, at that time the main focus objective of auditing was to detect the errors. Nowadays the objective have changed, but ancient times, earlier times, the main objective of auditing was to detect the errors and faults. It was largely confined to cash audit. That means auditing normally was done by the government, by the treasury, in order to check whether the accountants have correctly recorded the cash receipts and cash payments. That's why earlier times, olden times, the audit was confined only to cash audit. The person who is receiving the cash, paying the cash, he has correctly recorded all cash receipts and cash payments or not. That means the activity area, scope of auditing was very small in olden times, in the ancient times. So audits were initially undertaken by the treasury. Treasury means government. Normally in ancient times, auditing was mainly done by the government or treasury, and any detection of fraud resulted in hefty penalties. The government will put a heavy penalty for a crime. It's a crime to make any errors in accounting. Now, however, the industrial revolution, after having this industrial revolution, resulted in increase in the scale in the size of operations. So after industrial revolution, the size of the business, the scale of the business have increased. The forms of business organizations has dramatically changed. Now the businesses are formed at different locations. So on account of this industrial revolution, that means the scope of auditing has also changed. More importantly, the owners of the company. The owners of the company are the investors, shareholders, and We are relying on professional managers' management to run the company. Normally, in a limited liability company, in a joint stock company, there is a diverse of ownership and the management. The company owners are the shareholders, and the management of the company is professional people, managers, directors. So the owners are interested in getting the accurate, authenticate data, accounting information from the company. So the professional managers or the auditor or the directors of the company should get the accounts audited by independent professional people. Once it is audited, then the owners can rely on the reliability and authenticity of the financial information. Now, the owners wanted a thorough scrutiny of the books of accounts with an ultimate objective of verifying the financial position. The owners or the shareholders wants that the accounts should be true, should be authentic. That's why they insist on the company management that auditing should be done. The auditors should be professional auditors should verify and check the accounts by the income statement and financial statement of financial position. So ultimately decisions are taken on the basis of financial statements. The financial statements are income statement and statement of financial position. Normally we call it as profit and loss account and balance sheet. So these financial statements should be accurate, authenticate. So auditors have to check the accounts and give their opinion about the true and fair state of affairs that is reflected in the financial statements.